Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. Hello everybody, my name is Madam Fizi and I'm from College Matrikulasi Negeri Sembilan. In this video, we will discuss adjusting entries and correcting entries. If you like this video, please subscribe, like and share. In this video, firstly, we will discuss types of adjusting entries and secondly, correcting entries. Types of adjusting entries. We will learn purposes of adjusting entries, types of adjusting entries. Those are unearned revenues, accrued revenues, prepaid expenses, accrued expenses, depreciation, and bad debt expenses. Purposes of adjusting entries. The main purpose of adjusting entries is to update the accounts to conform with the accrual concepts. It means that to allocate revenue and expenses among accounting periods in accordance with the revenue recognition and expense recognition principles. At the end of the accounting period, some income and expenses may have not been recorded or updated. Hence, there is a need to adjust the accounts balances. There are two types of adjusting entries. Those are deferrals and accruals. Deferrals are divided into two. Firstly, unearned revenues. It means that cash received before services or goods are performed or delivered to customer. Secondly, prepaid expenses. Expenses paid in cash before they are used or consumed. Accruals also divided into two. Firstly, accrued revenues or revenues receivable. It means that revenue for services or goods have been performed or delivered to customer, but cash has not been received or recorded. Secondly, accrued expenses or expenses payable. It means that expenses incurred but not yet paid in cash or recorded. Unearned revenues. Unearned revenues is money received by a company, but a service or product has not yet provided or delivered to customer. The seller has a liability equals to the revenue earned until the goods or service is delivered to customer. It means that we have received cash, but the service or goods not yet delivered to customer. For example, airline tickets in airline company, prepaid insurance from customer in insurance company, and advance rent received. Example of unearned revenues. Pillar Advertising received RM1,200 on October 2nd from Rembau Knox for advertising services expected to be completed by December 31st. Unearned service revenue shows a balance of RM1,200 in the October 31st trial balance. Analysis reveals that the company performed RM400 of services in October. It means that on October 2nd, debit cash 1,200 and credit unearned service revenue 1,200. For adjusting entries on 31st October, debit unearned service revenue 400 and credit service revenue 400. In this case, we declare service revenue because the company have performed RM400 of service in the month of October. Accrued revenues or revenues receivable. Accrued revenue is revenue that has been earned by providing a goods or services but for which no cash has been received. Recorded as asset to reflect the amount of money that customer owe the business for the goods or services they purchase. It means that service or goods has been given to customer, but we didn't receive any cash yet. For example, interest revenue and accounts receivable. Example of accrued revenues. In October, Pillar Advertising performed services worth RM200 that were not billed to client on or before October 31st. So the adjusting entries on October 31st, debit accounts receivable 200 and credit service revenue 200. We credit service revenue because we have performed services, and we debit accounts receivable because we did not receive any payment from client. And let's say on November 10, Pillar Advertising received cash of 200 for the services performed. So, on November 10, debit cash 200 because we received cash from customer, and credit accounts receivable 200. Prepaid expenses. Prepaid expenses are future expenses that are paid in advance. It is recorded as an asset. It is because of we have already paid cash, but the expenses has not incurred yet. Once the benefit is realized, the amount is then recorded as an expense. For example, prepaid insurance, prepaid rent, supplies, and others. Example of prepaid expenses. On October 4th, Pillar Advertising paid RM600 for a 1-year fire insurance policy. Coverage began on October 1st. This account shows a balance of RM600 in the October 31st trial balance. Insurance of RM50 expired each month. It means that on October 4th, debit prepaid insurance 600 and credit cash 600. So, for adjusting entries, October 31st, debit insurance expenses 50 and credit prepaid insurance 50. We debit insurance expenses because the expenses has been incurred. Accrued expenses or expenses payable. Accrued expenses, also called accrued liabilities, are payments that a company is obligated to pay in the future for which goods and services have already been delivered. It is recorded as liability. If an expense, it records as an expense payable, and if it is a merchandise, then record as accounts payable at credit side respectively. It means that the service or goods have been delivered, but no payment has been made yet. For example, utility payable, salary payable, and others. Example of accrued expenses or expenses payable. Pillar advertising pay the employee salary every second day of each month for the previous month's salary. Therefore, the October salary of RM 1,200 will be paid on November 2nd. So, the adjusting entries: October 31st, debit salary expenses 1,200 and credit salary payable 1,200. In this case, we must declare salary expenses because the expenses has been incurred, even though the salary has not been paid yet. And on November 2nd, debit salary payable 1,200 and cash credit 1,200. We credit cash on November 2nd because we pay the October salary on this date. Depreciations. Buildings, equipment, and motor vehicle, assets that provide service for many years, are recorded as assets rather than an expense on the date acquired. Depreciation is the process of allocating the cost of an asset to expense over its useful life. Depreciation does not attempt to report the actual change in the value of the assets. It is an allocation concept, not a valuation concept, and it is recorded as an expense in statement of income. Example of depreciation. Pillar advertising assume that depreciation of the equipment is RM 480 a year or RM 40 per month. So the adjusting entries: on October 31st, debit depreciation expense 40, credit accumulated depreciation equipment 40. Accumulated depreciation is called a contra assets account. Bad debt expenses. A bad debt expense is recognized when a receivable is no longer collectible because a customer is unable to fulfill their obligation to pay an outstanding debt due to: the debtor may have passed away, the debtor may have become bankrupt, or the debtor may have disappeared or cannot be contacted. So it is recorded as an expense in statement of income. Example of bad debt expenses. On October 25th, Pillar Advertising has successfully identified that a debtor named Badrul has gone bankrupt and was unable to pay his debt of RM 1,000. So, the adjusting entries: October 31st, debit, bad debt expenses 1,000, credit, accounts receivable Badrul 1,000. Correcting entries. A correcting entry is a journal entry that is made in order to fix an erroneous transaction that had previously been recorded in the general ledger. There are two ways to make correcting entries. Firstly, reverse the incorrect entry and then use a second journal entry to record the transaction correctly. Secondly, Make a single journal entry that, when combined with the original but incorrect entry, then fix the error. There are two types of errors. Firstly, types of errors you will not see. It means that error where the trial balance still balances. Secondly, types of error you will see. It means that error where the trial balance does not balance. Types of error you will not see. Number 1, error of omission. That is, a transaction has been completely omitted or not recorded. Number 2, error of commission. That is, a transaction has been recorded in the wrong account. Number 3, error of principal. That is, a transaction has conceptually been recorded incorrectly. Number 4, compensating error. That is, two different errors have been made. Number 5, error of original entry. That is, the correct double entry has been made but with the wrong amounts. And number 6, reversal of entries. That is, the correct amount has been posted to the correct accounts but on the wrong side. Types of errors you will see. Number 1, single-sided entry. That is, a debit entry has been made but no corresponding credit entry, or vice versa. Number 2, debit and credit entries has been made but at different values. Number 3, two entries has been made on the same side. Number 4, an incorrect addition in any individual accounts, for example, miscasting. Number 5, opening balance has not been brought down. And number 6, extraction error. That is, the balance in the trial balance is different from the balance in the relevant accounts. Example of correcting entries. On August 1st, Encik Ahmad purchased machinery for RM100,000 and wrongly debited the furniture accounts. Prepare a journal entry for the adjustment. Identify the wrong entry. Encik Ahmad recorded the purchase of machinery of RM100,000 wrongly to the accounts of furniture. That means, on October 31st, debit furniture 100,000 and credit cash 100,000. By using the first way of adjusting entries, so the adjusting entries, step 1, passing the reverse entry to correct the effect of wrong entry. October 31st, debit cash 100,000 and credit furniture 100,000. Step 2, passing the correct entry. That is, October 31st, debit machinery 100,000 and credit cash 100,000. We use the same example. On August 1st, Encik Ahmad purchased machinery for 100,000 and wrongly debited the furniture accounts. Prepare a journal entry for the adjustment. Identify the wrong entry. Encik Ahmad recorded the purchase of machinery of RM100,000 wrongly to the accounts of furniture. That means, on October 31st, debit furniture 100,000 and credit cash 100,000. by using the second way of adjusting entries. So, the adjusting entries is to make a single journal entry that, when combined with the original but incorrect entry, then fix the error. We found that credit cash is correct, but debit furniture is incorrect. So, the adjusting entry on October 31st, debit machinery 100,000 and credit furniture 100,000. I hope that this video will give benefit for you. Don't forget to subscribe, like and share. And thank you for watching. Assalamualaikum warahmatullahi wabarakatuh.